Welcome to episode 189 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at how to trade using moving averages. Moving averages are kind of nice because they help us identify the trend, and then we can enter into a trending move using this tool. So let's go on to the charts and we'll take a look at what moving averages to use and how to enter a trade using moving averages.
Here we are looking at how to trade using moving averages. Today we'll talk over moving average crossover. When using moving averages, they are a good tool to use, especially if you are a newer trader and you're looking to get into a trend. So they are a trend trading indicator. Now, we do have to keep in mind, as with any other indicators, moving averages are lagging indicators. So usually price would have moved already while moving averages are still turning around, and then as price moves, moving averages will fall in line as well. So it's a good indicator if you are looking to identify the trend. However, it can be lagging as well. So keeping that in mind, here we are looking at 50 and 100 moving average. So when our 50 moving average crosses the 100 moving average to the upside here, that shows that there is an uptrend in place. So moving averages crossover. When faster moving average crosses over the slower moving average to the upside, that means we are beginning a new uptrend. And when the faster moving average crosses below the slower moving average, then we are looking for a downtrend. So in this case, we can see our 50 moving average is crossing our 100 moving average to the upside. This suggests that price is likely to move higher. So in this case here, we see that our entry is over here. This is because we have to wait for our moving averages to cross over. So when moving averages cross over, price would have already moved. So this is the candle that we would see. So we wait for a bit of a pullback and then enter the trade long. And as we see that the moving averages are expanding, we stay with our trade. Price starts to go sideways here, then it tries to make another push up here. One thing to notice here is the price action here stays above the moving average. So it hasn't crossed over to the downside. So once we see price close below our moving average, we can exit our trade, or we could also wait for price to cross to the downside with our moving averages crossing to the downside, showing that a new trend is about to begin. So we have an option of exiting here. I prefer to exit sooner rather than later because sometimes it can take a while for moving averages to cross over again. So that's why I prefer to take the profit after price crosses and closes on the other side of the moving average. So this way we can save ourselves some hassle. So in this case, from entry to exit, we get 253 pips in the trade. So just to recap, trading with moving averages is a good thing to do when maybe either you're a new trader or you're looking to identify the trend. So in this case, it will be slower since it's a lagging indicator. Price will move first. As we can see here, price gives us a double bottom and then starts moving upwards. However, we don't get an entry based on the moving averages until this candle closes here because we have to wait for moving averages to cross over. So once we see our moving averages cross over, we see a big bullish candle close here. We'll wait for a bit for pullback and we enter the trade long. And then we stay with the trade as long as price is above our moving average. Generally, we'll find price comes and tests the moving average and bounces off, test the moving average, bounces off, test the moving average once again here, and it bounces off then. And this is the first time it actually closes below the 50 moving average. So this is a good time to exit the trade. From entry to exit here, we get 253 pips in our trade. So our profit is 253 pips or $2,530 if trading one standard lot.
If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/forex course.
Thank you so much for joining me today. I hope you enjoyed this episode. If you like this video, please feel free to subscribe and share it with your friends. I'll be back with another great trade setup next time.